with the consumer spending picture, the retail sales data coming in strong. I think Bespoke was out with a note earlier today saying it's the 6th straight time that we've seen a better than expected report on retail sales. And at the same time, you've got reports that 56 million Americans have been in credit card debt for at least a year or maybe longer. How exactly does that story then play out? We've been seeing consumer strength driving things for a while, shaking off some of the negative headlines.
That's been one of those head scratchers for me for the past year, where credit card debt has been going straight up. Pent-up savings has been going down. Basically, the consumer feels like they're out over their skis, yet everybody says, don't worry about it. But sooner or later, that chicken has to come home to roost. And I think we're at that point right now. So again, you need a very differentiated company that has real secular growth to bust through a slower consumer spending environment, because as we all know, the consumer is driving GDP ultimately.
Let's talk about some of the stocks you like and some of the sectors you like. I see 3 on your nice list, not the naughty list: Aptiv, Amazon, and CDW. Why those?
So you look at Aptiv, and Aptiv is a stock that's really been beaten up in the last year, quite frankly. Everybody's worried about the EV slowdown, and certainly that is happening. But we've been underproducing cars globally for the last couple of years. So there's certainly a catch-up as cars don't last indefinitely. And the buyer of a car does want more of their safety and infotainment systems in a car. So I think there's real secular growth there and a little bit of a cyclical trade. You look at Amazon, the reason Amazon did so well last year is they dramatically beat earnings expectations as they reined in cost growth. The announcements that we saw last week in terms of with Twitch and with Prime Video are just another step in terms of controlling costs. So I think Amazon earnings are going to beat expectations as we go through 2024. And then you'll get CDW. CDW is a company that sells hardware as well as software. Hardware was very weak last year. This year, it's going to be a lot stronger as we cycle the weakness in 2023. And we saw that with the fourth quarter IDC numbers that came out.